May-August 2020 management case study, is based on the fictional company of Alpaca Hotel Group. And what I'm going to do over the next few hours is to walk you through each page of this document, discussing relevant E2F2P2 theories as they relate to the different issues we will be seeing, discuss likely exam issues that could come up on the day of the exam, and generally just point out things of interest as I see them. So we'll go into detail on every page of the document. So starting with the introductory section, you're told, first of all, that Alpaca is a quoted company. So that means it's listed on the stock exchange in its country. It owns and operates 50 luxury hotels in the country of Maylandia. So fictional country, fictional business, but the industry is of course very real. The head office is located in Mayberg, which is the capital city of Maylandia. So we're told then that Maylandia is a developed country. We're not given much more information in this pre-scene about Maylandia as to, where it's located, etc., what continent it is in. But we do know that it's developed. It's got a high standard of living and the economy is booming. So let's unpack a little bit what we've seen in this first section. So the fact that Alpaca is a stock exchange listed company, a public company, has a number of implications for us. First of all, thinking of corporate governance, which you would have come across in the enterprise pillar of CIMA, so E1 and E2, it has implications because there's more expected basically of a publicly listed company in terms of how it governs itself. There are expectations in terms of the number of non-executive directors, which should more or less equal the number of executive directors on the board so that they keep the executive team honest, the ones who run the business on a daily basis, and they represent the interests of the shareholders. So as well as that, we need to keep certain F2 accounting standards in mind. So IAS 33, for example, earnings per share, a key measure for shareholders. We're keeping an eye on the performance of the company. IFRS 8 is also relevant here. So operating segments, we'll see that this company has a divisional structure. So it has different segments that it would need to report on in its financial statements. So that's required of stock exchange listed companies with different operating segments. The fact that it's publicly listed means that it does have more financing options. So it's not just able to use its internally generated funding, cash rather, from its own operations, but it can tap into obviously debt as well, but it can also issue shares if it wants to raise financing for an acquisition or the opening of new hotels. So lots of financing options. Of course, there are cons with being a publicly listed entity. The first one, is that there's all of this regulation. There's the expectation that the company will produce audited financial statements on a quarterly basis. There are analyst calls to deal with and investment analysts that need to be appeased and track your company's performance and ask difficult questions of you. So you're exposed to the public gaze in a way that a private company is not. And in general, the investors of the company, the shareholders, we want to keep a close eye on the share price. So there are one of two ways in which an investor can get a return on an investment like this in a share. One, through share price appreciation, or two, through dividends, and ideally some combination of both. So the fact that Maylandia is a developed country with a high standard of living has implications for how we think about the costs of the companies, because the fact that it's based in a developed country and it's quite a labor-intensive industry, the hotel industry, means that its wage costs are going to be a little bit higher. It's also a plus in that if they have a lot of domestic customers, guests in their hotels, they are customers with significant spending power, especially since the economy is booming. That also means that they're likely to bring in a lot of corporate clients, okay? We'll discuss in a while the importance of business travelers for this company. So next up, we have mention of the fact that Mainlandia's currency is the M dollar. So again, fictional currency in a fictional business, fictional country. And it leads us to ask whether they're exposed to adverse exchange rate movements. So F2 again, IAS 21 being relevant here. We'll see that Mainlandia has actually not got any hotels outside of its home country. But, there's reason to believe that they are exposed to adverse currency movements potentially, because they could be dealing with guests from other countries. In fact, it's certain that they are, and they could be dealing with suppliers, customers, etc. in other countries for a variety of reasons. So you're a finance manager in Alpaca's head office. You report to Liz Petrov, the senior financial manager. She reports to Zoe Diaz, Alpaca's finance director. And your primary duties, we're told, are associated with management accounting, but you're also asked to gather information on other matters for your superiors. So that's rather vague, other matters. So it really leaves it really open for CIMA, unfortunately, to ask just about anything of you. So expect questions that relate to theories from P2, F2, and E2. So they're not really narrowing it down for you here. So as a finance manager, let's discuss some of, the expectations of you in your role. You're expected to monitor the implementation of strategy. So you're kind of between two levels here. The operational case study saw you as a finance officer, so quite low down, dealing with day-to-day issues, the execution of daily tasks. The strategic level, when you get there, will see you as a senior manager. You'll be interacting with the top people at the business, so the CEO, the CFO, etc. And you will be responsible for helping to determine the strategy of the company over a 3 to 5 year period. As a finance manager, you're in between those two. So you've got a medium-term focus in the kinds of investments and the services and so associated prices that you need to establish. So you're talking about a 1 to 2 to 3 year time frame. And the people higher up will be determining the strategy. You'll be in charge of ensuring that it is implemented. Because you're dealing with a longer time horizon than you were at the operational case study, you're talking also about longer term financing. Okay, so it's no longer about short term financing, it's about putting longer term financing in place, whether it's through the issue of shares, whether it's through the taking on of long term debt. And you need to be dealing with the risks associated with these recommendations that you make. So, thinking of the TARA model that you would have come across in P2 is a pretty good model for managing risk. You've got more advanced financial reporting than you had at the operational case study. So you're talking about consolidated financial reports. This is a company with group financial reporting. And you're going to have to influence top management a little bit more. So at the operational case study, you would have been dealing more with people at your level, some managers. Now you're going to be dealing with more senior people, and you'll need to influence them. You need to make your point more forcefully, and you would be expected to give recommendations. And you need to consider the wider context within which your business is working. So it's not just about your own little business anymore and just making recommendations that affect the bottom line of your business. You need to get your head up, consider competitors, the environment. You need to consider the locale in which you're operating. Are there any negative externalities there? You need to consider regulators, and they do play a role in this industry. Thinking of P2 and some of the major issues that are likely to impact on this pre-scene, having studied it in depth, I would say, managing costs is going to be important, because we'll see later on that in the last year, this business hasn't done that well from a financial performance point of view. Revenues have declined, and profitability has declined even more because its costs have gotten a little bit out of hand. So applying relevant cost models to get on top of those costs, using activity-based costing, analyzing the profitability of different customer segments is going to be a good idea. Again, things like cost of quality as well, in ensuring that the quality is high, because these are luxury hotels. The expectations of guests are going to be very high. Using something like total quality management might also be relevant for this business. There's going to be discussion of responsibility centers as well, because we'll see this company has a divisional structure and is given a lot of responsibility to its individual divisions. Non-financial performance measures are going to be very key as well, because there are lots of intangibles really in this industry. Guest satisfaction and, the human interactions largely dictate the experience that guests have. So lots of intangibles, lots of subjective things. It's not just about hard numerical and financial measures. So the balanced scorecard would be something that is of use to this business. Transfer pricing is going to be relevant, I think, because we've got a holding company, we've got a couple of subsidiaries, it seems, or divisions, and managing risk and uncertainty is always important in the management case study. So thinking of expected values, running sensitivity analysis, etc. Thinking of E2 then, some of the major issues that I've flagged, having gone through this pre-scene, the ecosystem. Okay, so looking at the traditional view of a marketplace, which would be, the view that Michael Porter has with the 5 forces, competitors fighting for custom. It's very adversarial. Modern ecosystems tend to be less so, and we'll discuss why in a few pages' time. Digital disruptors are everywhere in this industry. You've got meta search companies like Trivago, where you can easily compare prices and do bookings through these companies. You've obviously got Airbnb, which is not mentioned anywhere in this pre-scene, which I think is kind of like the elephant in the room. Major disruptor for hotel businesses in recent years, and giving customers a lot more choice and reducing the power of traditional hotels. And you've got companies like TripAdvisor as well, review sites. Again, giving more power to guests. And of course, how could I not have mentioned it so far, the whole coronavirus situation. I really find it hard to think of an industry that is more impacted by the coronavirus situation over the medium term than the hotel industry, maybe the airline industry as well. So they're going to really suffer as this whole thing unfolds. And, the rest of us are kind of transitioning to being digital workers, or many of us would be, and can work from home. It's going to be difficult for hotels to do that. And effective management, measurement of performance, and conflict management, I think, is going to be important. Remember, I talked about the fact that this business, divisional structure, the danger with a divisional setup is, especially if they're very autonomous, and these are very autonomous divisions, as we will see in a while, is that you can have conflict developing as they fight it out for resources, and that is a danger to this business. Okay, so that's the first page of the pre-scene. So lots of things to unpack there. We're only getting started. So let's move on and take a look at the hotel industry in general. Okay, so I think we all know what hotels do, so it's kind of overkill, many parts of this particular section, but we're going to run through it anyway. And just again to come back to that point that I raised before about ecosystems, which is kind of a new term that CIMA has started to use, and it's part of the E2 syllabus. So what we're trying to do here is to get a good understanding of the ecosystem connected to the hotel industry. So previously we would have talked about, markets, okay, which, as I said before, are kind of, the traditional market view would be something like, the 5 forces from Michael Porter, where you've got these competitors and suppliers, everyone's jostling for a slice of the pie. There's a lot of, it's quite an adversarial type scenario, all fighting it out for your custom. And, it's very much transaction based. You pay me, I give you the product or service, and we go, each of us, on our merry ways. That is not really going to cut it in the 21st century, okay? The expectations now from consumers are that there is an experience. Not quite that there's a bond with the company, but you're going beyond just a transaction. The expectation is that businesses understand the customer more fully, and a way to understand the customer more fully is to utilize technologies. So you're getting real-time feedback with all of this big data coming in through different sources. You've obviously got those review sites we mentioned before, very, very well, great source of information for hotels. If they're tracking the comments that customers are leaving there, that's a very useful way to act on that feedback. And IT is going to be important in this context, and we'll talk about that more. So the ecosystem, it's broader than the traditional marketplace. It spans geographies. There are evolving collaborative systems and many players involved. So, you start to see the impact of platforms like Airbnb, for example, that's connecting different users around the world. As I said, technology is really having a big impact on our view, the transition from, traditional marketplaces to business ecosystems. Okay, so we'll be talking about that throughout this section. As I said, the traditional market view, buyers and sellers, is quite cold. Transaction, you're on your way, I'm on my way, and there's not much more. Now it's more about understanding more fully your customer and building a relationship with that person. So with the hotel industry, you've got two big segments. There's business travelers, and you have your leisure travelers as well, okay? So business guests, they require a base from which to attend meetings with colleagues, customers, suppliers. Leisure customers, it's all about shorter trips, maybe 1 to 2 weeks, although the business travelers, it's often a day or two. But with leisure travelers, often, they're coming in groups of more than one. Often it could be a family, they're staying for a week or two. And we've got 3 types of hotels that are mentioned here. You've got basic hotels, mid-range hotels, and luxury hotels. And luxury hotels, that's where we know that our Alpaca group is located. But let's discuss the other 2 first. So the basic hotels, they offer simple accommodation, small bedrooms with an ensuite bath or shower room. And the expectations from the guests are, keep my room clean, and that's about it. Okay, so rooms have to be cleaned on a daily basis, fresh sheets put down, and the basic hotels often don't go much beyond that. Okay, so they're often not offering even, restaurant food, for example. Some of them do, but many of them don't. So these would be your 1-2 star hotels. And according to a theory you would have seen in E1, Michael Porter again, generic strategies, he would classify the basic hotels as cost leaders, okay? So they're keeping their costs down. They're passing on savings to the consumer, and they're offering something quite basic. Mid-range hotels then offer larger rooms in general than the basic hotels. The expectation is also to keep the rooms clean, but they're going beyond that then, and often they're offering restaurant services, coffee shops, and their dining facilities often will be open to anyone, so members of the public who are not staying at the hotel as well. And many mid-range hotels have started offering business facilities so that you can have conferences and meetings there, and there are audio-visual components in these different meeting rooms as well. So these are kind of non-core activities we're getting into now, but they offer a way for these companies to collect ancillary revenues. And going beyond these facilities then, some of these hotels offer leisure facilities, so gyms, swimming pools, etc. And as you add these services, obviously, it can become quite expensive to provide these services, especially if the uptake is not all that high. So given the fact that the mid-range hotels have obviously got less pricing power than the luxury hotels, these mid-range hotels would be your 3-star hotels, I think there's a danger that they might become unprofitable, or that they might currently be unprofitable, many of them. And they're kind of stuck in the middle, again, referring to that Michael Porter generic strategy model. Okay, so they're not differentiated and, like the luxury hotels, they're not cost leaders. They're kind of in danger of being stuck in the middle. So if some of these were to go out of business, and especially in hard times like the current coronavirus situation has dictated, it could well be that a luxury hotel group like Alpaca could pick some of these up on the cheap and convert them to more luxury establishments. Okay, so luxury hotels next are where our group is located. So these are larger, better furnished rooms, and even they go beyond that. They can actually accommodate an entire family, for example. So you've got a kind of a shared space with a couple of different rooms. So it'd be like a flat almost, with a shared sitting room or something like that. The expectation is higher in terms of the cleanliness. So there would be a housekeeping service twice a day. And there's a wide range of dining options with 2 or more restaurants, and high standard restaurants, obviously. So differentiated offering here in accordance with Michael Porter's generic strategies, and definitely higher quality. Obviously that means higher cost, but I think they're less vulnerable than the mid-range hotels, to going out of business, because they have the ability to charge premium prices, given the fact that they're carrying this signifier of quality, 4-star hotel, 5-star hotel, that we will talk about in a while. Okay. So continuing then with the luxury hotels, they're able to attract significant numbers of non-residents to their restaurants. And that, I think, is important. It's likely to contribute, I think, firstly to the bottom line, so to profitability. And also, the footfall is quite important there. It signifies to the general public that this is a quality establishment, and people are queuing up to make reservations here. And then that means, there's a kind of a positive association, with the spilling over from the restaurant services to the accommodation services. Then you've got business facilities. They seem to be more involved, more extended than the mid-range hotels. So these luxury hotels offer, the ability to host a whole conference or major social events. So that's good PR, obviously, for the hotel. And the leisure facilities then are very high-end as well. Gyms, swimming pools, beauty spas, saunas, etc. As I said, though, before, these are your traditional hotels. And I'm surprised not to see any mention of digital platforms like Airbnb or an equivalent in this pre-scene. I think, that CIMA might well be saving its ammo for the day of the exam. And I wouldn't be surprised to see something come up on an Airbnb type company, okay, and how it's disrupting this particular market. It's taking away power from the traditional hotels, and it's reducing their ability to price at premium levels, etc. And it's offering a very realistic alternative, not just to leisure travelers, but to business travelers as well. Many business travelers are opting to stay at Airbnb locations now. So they're the 3 types of hotels. Let's dive a little bit deeper into what makes business and individual travelers a little bit different, and the kinds of hotel companies that we can have. So some hotels operate independently, while others are part of a chain. We know that our hotel group is part of a chain, so it's got 50 hotels across the country. Now, that doesn't mean that they're all the same. And in fact, Alpaca, interestingly, has quite a lot of difference between its different hotels. We'll talk about that in a minute. So the attraction with the chains that have a very standardized service across their different hotels is you know what you're going to get, okay? There's consistency of service. So if you're someone who is loyal to a particular hotel group and you know it's the same, regardless of the city, regardless of the country, you might well opt to stay with them wherever you go because you want something that you can rely on. The danger with the chains, of course, is that one branch that that has a negative experience, or rather guests have a negative experience, can affect the rest of the group. So, that needs to be watched out for. But with other hotel groups, or rather with other hotels, the independent hotels, they try to go against the one-size-fits-all type approach from the chains, with a more unique style of service. And that works well for independent hotels. So they try to stand out, they differentiate themselves, and they focus on a particular type of service. And what Alpaca is actually doing is kind of caught between the two, okay? Because it's obviously a chain, but we'll see in a while that it's actually offering something different in all of its hotels. And there are pros and cons, I think, that come with that approach that we'll discuss again in a little while. So very competitive industry, and becoming more and more competitive with digital disruptors like Airbnb, for example. And, there's a lot of pressure, downward pressure on price for the budget hotels, for the mid-range hotels. The premium hotels, like Alpaca's hotels, the 4- and 5-star hotels, do have a little bit more in the way of pricing power. And what they try to do, correctly, I think, is turn the discussion away from price to one of quality, one of service, okay? So they're avoiding getting to this scrap for existence with the hotels that are focused only on price. But in general, this is an industry with lots and lots of choice, lots and lots of competition. And there are many substitutes coming on the scene. As I said, Airbnb, that all leads to downward price pressure and pressure on profits. So the business travelers we discussed have bills settled, often by their own employer. And this is interesting because the cost becomes kind of irrelevant. Thinking of P2, price elasticity of demand, which is the impact on demand from a rise in price. So if there was a lot of elasticity, high price elasticity, a little increase in price would lead to a big drop in demand. But with the business travelers, what you could expect is, what we're told here is the price is almost irrelevant. Okay, so you could hike your prices up overnight and your business travelers are still going to come in through the door because they're not footing the bill directly. It's their company that is footing the bill. Okay, so the idea is that there are no distractions. It's more comfortable for the business traveler to work from this location, and also can kind of enhance a guest's credibility if he or she says, to a supplier or a potential customer, I'm staying at such and such a hotel, it's 5 stars, etc. So there's that kind of positive spin that they can put on it. Now, I think it's interesting, and we need to keep in mind the current situation, the coronavirus situation, because undoubtedly every business is suffering at the moment, and more scrutiny is certain to come on expenditure of all types for all sorts of businesses. So the days perhaps of business travelers spending willy-nilly in hotels, not paying attention to price, I think that's going to end at least over the next year or beyond even. And this is going to hurt this business. Now, a word on the coronavirus situation, because I'm sure you're kind of thinking, should I be bringing this into my exam or not? I think, first of all, that it's very likely that CIMA is going to be asking something about some kind of virus, okay, that's disrupted all sorts of businesses and, has led to a drop overnight in demand. And as I said, the hotel industry is massively affected by this, not just in the short term, because while other businesses can kind of, they can get back on their feet probably in the next couple of months, I think, international travel is going to be disrupted for a longer time. So airlines are not going to be shipping or transporting as many people across borders as they were. People are going to be a little bit fearful of traveling. So massive, massive impact on this industry. So look, if CIMA brings it up, obviously you've got to talk about it. If CIMA's not bringing this into the exam, you kind of want to stay within the confines of this fictional universe, and you can assume that the coronavirus thing isn't happening. But if CIMA's bring it up, you need to work with it. And I would be very surprised if they didn't work it into one or more of the exam variants. So beware of it. Hotel groups are going to suffer very badly with this. And as I said, business travelers, their expenses are going to be coming under scrutiny, and they're no longer going to be price insensitive. They will be price sensitive. Individual travelers then will select hotels on the basis of their willingness to pay for a given standard of service. So these are more price sensitive, okay, definitely, than the business travelers. And often they're traveling in groups of more than one. So you're talking about 3 people, 4 people, 5 people, a family. So again, that makes them even more price sensitive. So individuals, they're buying hotel accommodation often as part of a package deal to go on vacation. So that would include flights, hotel accommodation, car rental, etc. And often they book these packages through a travel agency, a travel company, okay? So we're seeing some of the other players in the ecosystem, airlines, car hire companies, travel agencies, etc. All of them impacted hugely by coronavirus. So we'll see later on that Alpaca is massively dependent actually on one particular travel agency in its home market for a big portion of its southern hotel bookings. That's not ideal. Okay, they need to lessen their reliance on that one particular travel agency. So what these travel agencies do is that they're often booking hotel rooms in bulk, and they can negotiate discounts with companies like Alpaca. Now, the airlines responsible for the flow of customers into and out of a country, and there are many airlines, I think, in danger of going bust, and we can expect air travel to be massively hit, I think, in the medium term. And that's going to have a big impact, obviously, to the number of consumers coming into a market like Maylandia and the number of guests staying at these hotels. Again, this is the real world. It depends very much on the universe that CIMA creates in its own exams, okay? So we just need to bear that in mind. If they bring up the virus, go for it. Talk about all of these things. If they don't, I wouldn't be bringing them in necessarily. Pricing. Okay, next one. We have pricing. So seasonal factors are taken into account for the prices that hotels charge. And what they do is enact, in accordance with P2, price discrimination. So they've got the same service, the same hotel rooms, the same kind of service, regardless of the time of the year, regardless, all of those factors, but they're charging different prices, okay? And we'll see that it's going to be important, their IT systems, because hotels have they have complex pricing systems. It's not that they set a price and forget about it. They use software, and algorithms behind this software keep a number of variables in mind, and based on those variables, and they're ever changing, they determine a price that can change day to day, hour to hour. So their IT systems need to be robust and would necessitate significant investment. Okay, so seasonal factors being borne in mind and local demand. So obviously summer is likely to be high demand period for the southern hotels that Alpaca has. We'll talk about those in a while. They're the beach resorts, and prices would drop in the winter for those particular hotels. So many guests are booking their accommodation through travel agencies still, and these travel agencies receive a commission of 10 to 20% from Alpaca. Travel agents then pass on some of that commission in the form of savings to their guests, the one that book through the travel agents. So I'm seeing, a couple of things play out here. Possibly there could be conflicts between Alpaca and travel agents when discussing this percentage, particularly if there's a recession, particularly in lean economic times, okay? So that could be an exam scenario as well, where Alpaca, because of the fact that its profits have taken a dip in the last year, so regardless of what's going on currently, this is a company that needs to get its costs down. And one way to do that would be to renegotiate commissions with travel agencies, okay? Also seeing the scope for third parties to potentially undercut Alpaca. So imagine Alpaca, through its own website, is offering a room, for $200. And they're going to their travel agencies. The travel agents have booked, in bulk, a number of rooms for an extended period. So they've got that inventory of Alpaca rooms in their system, and they're getting their commission from Alpaca. They decide, to cut the costs below what Alpaca is actually offering on its own website. So they're kind of undercutting Alpaca there. So there's that danger, I think, in the hotel industry with these third-party travel agents, okay? Then you've got the role of online players discussed a little bit here. So first of all, you've got online price comparison sites. Okay, so these would be the Trivagos of this world. So you go to these websites, you tap in, the city you're going to visit, your arrival and departure dates, and the system, the algorithm behind these websites will pull up a range of options based on the criteria you've established. You could also determine, the number of stars for the hotels, etc. And there you see customer reviews. And these are becoming very, very powerful players. And they're empowering the end customer, because what they're doing is creating lots and lots of price transparency. So it's so easy now to compare one hotel versus another. You say, oh God, look at this. You've got one four-star hotel here. You've got another here. And there's €100 difference between the rooms for the night. And they've got more or less the same customer rating. And then it becomes a no-brainer as to which one you're going to go for. So it undermines, I think, the power of traditional hotel players. So we're seeing the impact here of digital disruptors. And hotels pay also a commission for these online bookings, because you can book through many of these sites, Expedia, etc. These are online travel agencies as well. And they're paying commissions for each booking taking place. And again, savings can be passed on to the guests. So we've a scenario where these online comparison sites and these online travel agencies can undercut Alpaca and offer a lower price than the hotel is offering through its own website. So, considerable savings could be made by the end consumer booking through some of these price comparison sites. There is a plus, of course, for hotels like Alpaca in that they can allocate some of their less desirable inventory, depending on the dates, etc. So they might have low demand dates that they know there's not going to be a lot of demand, and they can offload that inventory, those rooms, to some of these sites. And they know there'll be a lot of eyeballs on these websites, so they can discard of this near obsolete inventory. Because obviously, when a date is passed, that's that. You've got an empty hotel room. It's not like, widgets that you produce. You can have them in your warehouse. You mightn't sell them today, but you can sell them tomorrow. That's not the case with hotel rooms. They're time sensitive. So there is an urgency here. And that's, I think, where these online price comparison sites really come into force in terms of the benefits they offer to Alpaca. Okay? There is the danger, though, with offering your rooms for, significant savings, some of this less desirable dates, etc., that I just talked about, in that for a prestigious brand like Alpaca, it could potentially erode some of that brand prestige if the price is too low. So there's a kind of a balancing act there.